Hello friends, let's continue with RTP September 2024. We have discussed certain questions in the past session. Let's continue with the next question, that is depreciation and amortization. Messer Deepak Transport Company purchased 10 trucks at 50 lakhs each. 10 ट्रक खरीदे, एक ट्रक का कॉस्ट 50 lakhs है on 1st October 2020. On 1st January 2022, ये देखो अक्टूबर 2020 में खरीदा, उसके बाद जनवरी 2022 की बात कर रहे हैं. One of the truck is involved in an accident. एक्सीडेंट हो गया उसका एक ट्रक का एंड इज कंप्लीटली डिस्ट्रॉयड एंड 35 लाख इज रिसीव फ्रॉम द इंश्योरेंस इन फुल सेटलमेंट. गाइस स्टोरी ऐसे कुछ है. 1st अक्टूबर 2020 को 10 ट्रक खरीदे, एक ट्रक का कॉस्ट है 50 lakhs. 1st जनवरी 2022 एक ट्रक एक्सीडेंट में डिस्ट्रॉय हो गया और इंश्योरेंस कंपनी से 35 लाख रुपीज मिले इन फुल सेटलमेंट. So basically whatever amount is received from insurance company is nothing but the sale price. So basically this is one sale of asset which is happening during the year. On the same date मतलब 1st January 2022, another truck is purchased by the company for a sum of 60 lakhs. मतलब कंपनी ने स्टार्टिंग में 10 ट्रक खरीदे, 50 लाख एक ट्रक का कॉस्ट था. एक ट्रक जल के राख हो गया, एक ट्रक जल के राख हो गया और उसी डेट पे और एक ट्रक खरीदा गया. The company writes off 20% on the original cost per annum. So the company is following straight line method of depreciation. You are supposed to give motor truck account for the years ending 31st March 2023 and 2024. सबसे इंपॉर्टेंट चीज गाइस, ट्रक्स खरीदे गए थे 1st October 2020 और ये लोग आपसे मांग रहे हैं ट्रक अकाउंट फॉर द ईयर एंडेड 31st March 2023 एंड 31st March 2024. कैन आई से 22-23 का अकाउंट पूछा है और 23-24 का अकाउंट पूछा है. सो एक चीज क्लियर है कि अपने को पहले 22-23 के ईयर पे पहुंचने के लिए 22-23 का कितना बैलेंस है ट्रक का वो ढूंढना पड़ेगा, क्योंकि ट्रक्स तो खरीदे थे 2020 में और अपने को बैलेंस चाहिए 22-23 में. तो फर्स्ट ऑफ ऑल वी नीड टू फाइंड आउट द बैलेंस, दैट इज द WDV ऑफ द ट्रक एज ऑन 1st April 2022 and then proceed with the problem. Let's go for it. Okay guys, let's continue for calculating the WDV of the trucks. This is question number 7. Calculation of WDV of 10 trucks. Yes or no guys? Yes sir. Now, what is the cost of 10 trucks? I'll not write cost of 10 trucks, I'll just write cost. I'll write here 50 lakhs into 10, which is nothing but 5 crores. Less depreciation. So guys, let's say the trucks were purchased on 1st October 2020. So 2020 means 2021 is the year. 2020, 2021. So I'll say 5 crores into, what is the rate of depreciation? Let's check. It is 20% on the original cost. So 5 crore into 20% into 6 by 12, because it is purchased in October. So this comes to 50 lakh rupees. Minus 5 crores. So we get 4 crore 50 lakh. This is WDV. Again less depreciation. $21.22. Since it is charged 20% on the original cost, so 5 crores into 20%, because original cost is 5 crores, it comes to 1 CR. This is 3 crore 50 lakhs. This is WDV. Now, so we have arrived WDV as on 1/4/2022. Let's check with the institute solution. Here it is. 3 crore 50 lakh. Here it is. We can find out to balance brought down 3 crore 50 lakhs. So we have arrived at the WDV of 10 trucks as on 1/4/2022. Now let's go for it. 1/4/2022. Now I think the company has sold one truck. Let's go for it. Here it is. The company has destroyed one truck in an accident. So basically the company has sold one truck. So let's calculate the sale price and the profit and loss on sale. This has happened on 1st January 2022. So basically this is 22-23. This was working number 1, guys. Working number 2. Calculation of sale price, depreciation, and profit and loss on sale. So whenever there is a sale transaction happening, we have to find out three things, guys. One is the sale price, one is the depreciation, and one is the profit and loss on sale. Let's go for it. First of all, WDV as on 1/4/2022. Why I am writing WDV? Because the truck has been destroyed in the year 2022-2023. You can check the question, guys. It was destroyed by fire on 1st January 2022. So the WDV of one truck is 35 lakhs. Sir, how we got 35 lakhs? I'll explain you guys. It was 3 crore 50 lakh for 10 trucks. Divide by 10. I'll find out the WDV of one truck. It's very simple, guys. One truck was lost in an accident. So what is the WDV of one truck? 35 lakhs. Less depreciation. Which year? Same year, 22-23. But I'll charge from April, May, June, July, August, September, October, November, December. This is how many months? 9 months. So I'll charge depreciation for 9 months, and that also on the original cost, because company follows original cost straight line method. And what is the cost of one truck? Can I say 50 lakhs into what is the rate? 20% into 9/12. Let's calculate 50 lakhs into 20% into 9 divided by 12. We get 7,50,000. Fine. So we get 7,50,000. Deduct it. What will get? 35 lakhs minus 7,50,000. We get 2750 WDV. This is WDV on sale less sale price. We have sold it for how much? 35 lakhs. So 27,50,000 trucks sold for 35 lakh. So it's a pure profit situation. So less 35 lakh. 7,50,000 is the profit earned by the company. This is profit on sale. So we have calculated three things. One is the sale price, other is the depreciation part, and third is the profit or loss on sale. Let's check this posting, guys. Here it is. So bank account debit to motor truck account 35 lakhs with the selling price. Depreciation account debit to truck account 7,50,000. Number two, and profit. Profit appreciates the value of the asset. So truck account debit to PNL 7,50,000. All happening on 1/1/2023. Done. Now on the same date, company has purchased one truck. So entry will be truck account debit to bank account 60 lakhs. And now the last part of the sum is to calculate the remaining depreciation. So let's calculate the remaining depreciation. Working number 3. Calculation of depreciation for 22-23. So how many trucks we have? Original 10. Out of that, one is lost in an accident. So we have 50 lakh truck costing trucks into 9 trucks, original one, plus we purchase one more truck. The cost price of it is 60 lakhs. But guys, 60 lakh trucks I'll calculate separately. 50 lakhs into 9 trucks into 20%. This is my depreciation for the opening trucks, which I have 50 lakhs. 32560. Yes, into 9 into 20%, guys. This is 90 lakhs depreciation. And I purchased one truck costing 60 lakh on 1/1/23. So 60 lakhs into 20% into 3/12, because it is purchased in January. Into 3 divided by 12. This comes to 3 lakhs. Total depreciation comes to 93 lakhs. Let's check the total depreciation, 93 lakhs. Yes, the entry will be depreciation account debit to motor truck account, and you will get the balancing figure of 2 crore 82 lakhs. Same balance will be brought down 2 crore 82 lakhs. And in the year number 23-24 also, the balance depreciation we need to calculate, and the balance depreciation we will calculate, that is working number 4. Calculation of depreciation for 23-24, guys. Let me check. 23-24. Yes, 23-24. So guys, I'll straight away say 50 lakhs cost of one truck into 9 trucks into 20% straight away. This will give me nothing but I've calculated 90 lakhs. And one more truck which I purchased in the last year, 60 lakhs straight into 20%. This will give me 12 lakhs plus 90 lakhs. One crore 2 lakhs. Total depreciation. So depreciation account debit to machinery account 1 crore 2 lakhs, and the final balance will be 1 crore 80 lakhs. So this is depreciation sum, guys. Very easy sum. Only the balance which was to be calculated was important from the calculation part. Let's go for the next problem. Let's go for the next problem, guys. So we have done depreciation also. We have done bills of exchange in the last session. Now I'll take a non-profit organization first. Question number 10. Question number 10, guys. The following information of Messrs. Sanyam Club are related for the year ended 31st March 2024. Now balances are given. This is the first point of the question. This is opening 1st April 2023 and this is 31st March 2024. This is closing. Stock of sports medal. This is opening stock. This is closing stock. Amount due for sports medal. Can I say this is opening outstanding? Previous year outstanding. Previous year will have only one effect and that will be minus. And current year will have two effects, that is add to expense and liability. Subscription due. So this is previous year outstanding again less and current year outstanding add to income and asset. And subscription received in advance. We have previous year pre-received. Previous year pre-received will be added and current year pre-received will have two effects, less from income and liability. So I've discussed the effects about stock of sports material outstanding expenses and subscription. Point number two, subscription received during that. This is the total received amount of subscription. Payment for sports material. This is the total payments made for sports materials. Fine. Fine, that's it. You are required to calculate the amount of subscription and sports medal that will appear in the income and expenditure account for the year ended 31st March 2024 and also show how these items would appear in the balance sheet on 31st March 2024. Okay, we'll present this in a better way. So this will be, I'll go for the next page, guys. Question number, let me check. The question number was 10. Yes, guys. I'll write this. Calculation of amount of subscription and sports material to be shown in income and expenditure account. Very simple, guys. Let's do it. I'll draw my income and expenditure account so that it becomes very easy. Done. This is rupees, credit, debit, particulars. Let's start with subscription first, guys. So I'll write by subscription. And I'll prepare the formula, guys, for you. Add, less, add. Outstanding, current year, outstanding, previous year, pre-received, current year, and pre-received previous year. Okay, so what is the amount of subscription received? Let's check. 3,75,000. So by subscription we'll have 375. Next, guys, outstanding subscription. This is previous year. Previous year will have one effect, 67,500. So deduct from this. Current year will have two effects. Add two. Sorry, not this one, guys. This is 11,250 and 16,500. Sorry, I've taken the wrong amount. 11,250. Let me check one more. 11,250, yes. And how much? 16,500. Done. And received in advance, this is previous year, this is current year. 9,000 previous year, and current year how much? 5250. Done. So this is what I have discussed with you. Subscription, I've given all the effects of subscription. Let's calculate. 3,75,000 plus 16,500 minus 11,250 plus 5,250. Sorry, this is minus 5,250. 3,75,000 plus 16,500 minus 11,250 minus 5,250 plus 9,000. 384. This is the amount of subscription. Let's check with the institute. The presentation way might be different, but the answer will be the same. Here it is. 384. Fine. Let's go for the main answer. Here it is. And now stage, this is sports material. So to sports material, what they've asked, let's check the question. The amount of sports material that will appear. So we'll write to sports material consumed. Let's start. I have always taught you a formula, guys. Whenever sports material consumed or drugs consumed or medicines consumed comes, you have to remember just one thing: OPDC. That is opening stock plus purchases less closing stock. Opening stock OPC. याद रखो OPC. Opening stock. Add purchases. I'll say less closing stock. And I'll add two things more in this formula. Less outstanding previous year because they've given medicine, so sports material do, and add outstanding current year. This is how my formula will work. Now let's check stock of sports material. Opening is 75 and closing 1,12,500. So opening 75, closing 1,12,500. I'll keep a bracket here. Okay. Then amount due for sports material. This is previous year outstanding. This is current year outstanding. The previous year outstanding less. Current year outstanding add. And payments for sports material 225. So this will go to payments. So what is the amount of purchase basically? They have done the payment amount. Let's check with the institute. Okay, 1 second. Here it is. So basically we have done correct. Payments. So 225 is the payment. Less 67,500 plus 97,500. 255 is the purchase. And the final consumed will be 255 plus opening stock 75,000 plus closing stock 1,12,500. So 217,500. Yes. So guys, here there is a little twist. Basically, we don't have the purchase figure, we have the payments figure given. So how to find out the purchase figure first of all? Calculation of purchases. The payment figure was given already. Payment for sports material. Let's check. 225. Previous year outstanding I'll deduct 67,500. and current year outstanding I'll add 97,500. So I'll get the purchases. So basically this is payments plus opening or we can say opening outstanding less closing outstanding. Payments 2,25,000 opening outstanding 67,500 225 minus 67,500 plus 97,500. So basically payment minus opening outstanding plus closing outstanding. I put the wrong signs, now rectified the same. 255 is the amount of purchases. Why I did this, guys? Because we don't have the amount of purchases given. They have given the payments made for sports material. So basically how we calculate purchases? The payments made minus previous year payments and current year payments we have added. So 255 is my purchases. And let's take this figure outside. So 75 plus 255 minus 1,12,500 minus 67,500 and plus 97,500. 247,500. No, I'm not getting the answer. Wait. So 75 plus 255 minus 112,500. 217,500. Wait. They have done the same thing. The payments minus previous year outstanding, add current year outstanding, you get the purchases. And then they have done just O plus P minus C. But I don't think so that is required. We can do this also. So this is basically 75,000 plus 255,000 minus 1,12,500 minus 67,500 plus 97,500. We can show this also. No problem in that. 247,500. So this is what they have asked. The amount of sports material shown in the income and expenditure and the amount of subscription. That's it. This is NPO from our side. Let's go for the next problem. Let's continue with the next problem, guys. As I've discussed NPO, just make a note of it, guys. Sports material they've asked us to show in the income expenditure. So outstanding previous and current needs to be adjusted. They have shown it as a separate working note, and I have rectified the same. I have done minus opening outstanding and plus closing outstanding. Initially I have told minus and plus on the opposite side, so it's rectified, and this is the final presentation. Now we are going for the partnership calculation or the partnership question. That is very important question as far as examinations are concerned. A and B are partners in a firm. Their capitals are 6 lakh and 4 lakh. During the year ended 31st March 2024, the firm earned a profit of 3 lakhs. Fine. So capital is given. Firm earned a profit of 3 lakh. Assuming that the normal rate of return is 20%. So the business earns a return of 20% or the industry earns a return of 20%. Calculate the value of the goodwill by capitalization method and by super profit method if goodwill is valued at 2 years purchase of super profit. So fine, very nice and small question. Capitalization method they've asked. Let's go for it. Capitalization method. Now what is capitalization method? First of all, capitalization can be done by two ways. One is by average profit method and one is by super profit method. Let's check with the institute. It's very simple. I'll just explain you how it works. Here it is. So capitalized method. So basically, always nothing mentioned. You have to go by average profit method, and they have mentioned also the profits earned by the firm are so and so. So how we'll calculate? Let's do the working for you guys. Question number 12. I'll say valuation of goodwill. And this will be Which method? Capitalization method. Let's start. First step, capitalized value of business is equal to profits given into 100 upon NRR. Profits how much they have given? 3 lakh into 100 upon 20. NRR is given 20. Basically, 3 lakh is the profit which the firm earns, and the industry return is 20%. So, if 3 lakh is 20%, which the industry gets, so what is the total value of the business? If 3 lakh is 20, how much is 100? 15 lakhs is the total value of the business. And the second step, which is very easy, goodwill is equal to capitalized value of business, that is step 1, minus capital employed. 15 lakhs minus the capitals of both the partners, which is nothing but 6 lakh and 4 lakh, A and B. This is 5 lakhs. So this is goodwill as per capitalization method. Let's check the answer with the institute. Yes, 5 lakhs. Now, super profit method. Let's go for it. Valuation of goodwill. We'll have super profit method. Let's continue. First step, let me check the steps. Here it is. So super profit method, basically we have the profits given of the firm, the profits given 3 lakh. I think straight we'll calculate normal profit, that is profits. Normal profit is nothing but capital employed into NRR, and then super profit, that is normal profit. Wait, we'll write steps only basically. First, profits are given 3 lakh, that is average profits or whatever you can say. Next step is capital employed. I'll write everything, otherwise it get confusion. Capital employed is rupees 10 lakhs, that is 6 plus 4. Next step is NRR, which is nothing but I think 20%. Next step is normal profit. Which is nothing but capital employed into NRR. Ten lakhs, 20%. 2 lakhs. So we have normal profit. Then we have super profit. This is regular profits minus normal profit. Regular profit 3 lakhs minus normal profit 2 lakh. You get 1 lakh. And the last step is goodwill. Is equal to super profit into number of years purchase. Let's check the number of years purchase. 2 years purchase given. So 1 lakh into 2, which is equal to 2 lakhs. That's it. We have calculated goodwill by capitalization method and by super profit method. Let's go ahead. Let's continue with the next problem. That is again a partnership question. That is question number 13, which is properly asked on admission of partner. So P and Q are partners sharing profit and loss in the ratio 3:1. This is old ratio. As at 31st March 2024, the following balance sheet is of P and Q. Okay. So partners capitals are given. This will go to partners capital credit side by balance brought down. Creditors will go to liability and general reserve will go to partners capital credit side by general reserve. This will be distributed in the old partners in the old ratio, because as this balance sheet belongs to the old partners, cash in hand will go to the balance sheet asset side, cash at bank will go to the asset side, or you can open a cash account. Sundry debtors asset, stock asset, bill receivable asset, land and building asset, and office furniture asset. They agreed to take R into partnership on 1st April 2024 on the following terms. So before going for the question, I'll just check what they've asked. Prepare revaluation account and partners capital. Very small question, revaluation and partners capital account. So now I think we should do the posting. We'll start with the balance sheet. So partners capital by balance brought down 285 and 155. Let's take the solution. Here it is. Okay. Here it is 285 and 155. And general reserve also we have 60,000 divided by 4. 3:1 the ratio. Divided by 4. So into 3 equal to 45 and into 1 equal to 15,000. And remaining were the liabilities and the assets. Let's check the question again. Where's the question went? 1 second. Here it is. Creditors will go to liability. Remaining assets will go to asset. Goodwill is to be valued at 2 lakhs. This is the total firm's goodwill. R is unable to bring cash for his share of goodwill. So incoming partner goodwill cash में नहीं ला पा रहा है. So whatever it is, whether he brings in cash, whether he doesn't bring in cash, one entry we have always studied with you people, that is partner to partner, gaining to sacrificing. So it was decided that due credit for goodwill to be given to P and Q. Means the old partner should be given the benefit of the goodwill for their sacrifice in favor of R through R's current account. So basically, goodwill he is unable to bring in cash. So basically, the benefit, even no, he is not able to bring goodwill in cash, the benefit should be given to old partners. So just now I said one entry, goodwill is an intangible fictitious asset. So goodwill should not be shown in the books of accounts. So the net entry will be partner to partner and gaining to sacrificing. So the whoever partner are gaining, they will be debited, and whoever are sacrificing, they will be credited. So before going for that entry, we need to calculate the ratios. R pays 1 lakh 40 is capital. So this will be bank account debit to R's capital. Let's check this, and his share is 1 by 5. So we'll do both things together, the ratio calculation as well as the capital entry. Let's check, guys. So this is it, the solution here. So bank account debit to R capital, and let's go for the ratio. Basically, old ratio is 3 by 4, 1 by 4. The new ratio is 3 by 5, 1 by 5, 1 by 5. That is 3:1:1. That's very simple, guys. Everybody knows this. Old one is the new one. And new how they have calculated, they have shown here 3 by old into balance this and this. So basically you get -3 is to -1 and this will be 1. So these both are gaining P and Q, and the incoming partner is sacrificing. So the entry would be P capital debit, Q capital debit to R capital. Let's check PQ to R. One second, we have done properly. Yes. Now total goodwill is 2 lakh. 2 lakh into 1 by 5, which comes to 40,000, is adjusted to current account basically. So basically both are gaining P and Q. So entry would be okay. They have done here wrong, means sacrifice they have written here, and gain they have written wrong, means they have written first sacrifice and then gain. Let me explain this with the ratio part. Don't get confused with this. Question number 13. P Q R. Go by my method, guys. They have done the same thing, but they have written first sacrifice and then gain. Okay, we'll start old ratio. I think 3 by 4, 1 by 4. Let me check. Yes. Incoming share is 1 by 5. So I'll write new ratio. 1 minus 1 by 5. Which comes to 4 by 5. Now how to calculate new ratio? Old into balance. 3 by 4 into 4 by 5. 1 by 4 into 4 by 5. And this will remain 1 by 5 only. So this is 12 by 20. 4 by 20. This will also become 4 by 20. And now sacrifice. Which is old minus new. 3 by 4 minus 12 by 20. This is 1 by 4 minus 4 by 20. This is nothing. This is 60 minus 48. Here by 80. Cross multiplication. 20 minus 16. This gets cancelled. Basically this is 12. This is 4. Which will give us 3 is to 1. So these both are sacrificing. And R is gaining. So what will be the entry? R account debit to P account to Q account. That's what they've done. Where it is. R to P to Q. So basically they have mentioned here it is to be adjusted to current accounts. R current to P capital to Q capital. So guys, let's read this question again. It's very simple. I've taught you guys. You know this how I've taught you how the technique goes. Here it is. They have mentioned here. He is unable to bring goodwill in cash. So it was just a due credit for goodwill to be given to P and Q in their sacrifice ratio in favor of R through R's current account. So basically, gaining to sacrificing is what we have done, and that is totally correct. But what will be the entry? R is gaining, so R capital not debit, R current account debit to P capital to Q capital. So while doing the posting in the capital account, we'll do the working now. Total goodwill is 2 lakhs. So basically R, don't get confused. We have calculated the ratios. Gaining to sacrificing, R is gaining. So R current, because it has mentioned to be adjusted to current account, to P capital to Q capital. आई होप गाइस क्लियर है. उसके करंट अकाउंट के थ्रू एडजस्ट करना है. टोटल गुडविल कितना है? 2 lakh and his share is 1 by 5. This comes to 40,000. In the ratio 3:1, that is 30:10. So guys, we have found out the amount also. Don't need to panic. They have done in their way. The answers will match. Let's see. Yes, it is 30 and 10 for goodwill. Done. And now they are expecting some capital adjustments from our side. Let's see the balance question. Here it is. So we have done goodwill. R pays 1 lakh 44 capital done. Stock and furniture to be reduced by 10%. So stock and furniture 2 lakh 10% 20,000 and furniture by 10%. So 1,000. So 20,000 loss and 10,000 loss. 30,000 is the loss and data is also 5%. 1 lakh 65%, 8,000. So let's calculate the total loss. If I'm not wrong, 20 plus 10 plus 8. 20 plus 10 plus 8. Devaluation loss. Yes, 20. 8 and 10, no, 1,000. Sorry, not 10,000, 1,000. And let me check the other part. Yes, furniture it is 10,000, 10,000. And RDD also done. Land and building appreciate by 20%. So 2 lakh 50, 20%, 50,000. Done. So we get a profit of 21,000. This is old partners old ratio. So 21,000 divided by 4 into 3 equal to 15, 7, 50 and 5250. This will go to partners capital credit side. And now the last part of the question. Let's see what they've given. So this is done, this is done, this is done, this is done, this is done. So I hope guys you are clear with the goodwill adjustment. So the goodwill entries, he is unable to bring goodwill in cash. Whether he brings in cash or whether he doesn't bring in cash, it is entries partner to partner, gaining to sacrificing. But what is the different part on this sum? Basically, instead of debiting our capital account, they have told us, they have mentioned that adjust through current account. So R is current account, 2P is capital, 2Q is capital. In the last adjustment, capital account of the partners to be readjusted on the basis of their profit sharing arrangement and any excess or deficiencies to be transferred to your current account. So you need to do a capital adjustment basically, and that will be done on the basis of incoming partners capital. So let's go for it. Incoming partners capital is 140 into reciprocal is 1 by 5, so 5 by 1. I'll do this capital adjustment for you also so that you don't get confused. Guys, it's a quick recap which we are doing. Capital adjustment. So always capital adjustment unless mentioned has to be made on the basis of incoming partners capital. So we'll write this total capital is equal to incoming partners capital into reciprocal of his share what is the incoming partners capital 140 what is his share? We have calculated the share 1 by 5, so reciprocal will be 5 by 1. One lakh 40 into 5, this comes to 7 lakhs. This is the total capital of the entire firm. And straight away do like this. P Q R. What is the new ratio? 12:4:4. 12 is to 4 is to 4. Or you can say 3:1:1. So 7 lakh divided by 20 into 12 equal to 420, 4 equal to 140, and the last also will be 140. So these are the new capitals in the new PSR. Let's check this. 420, 140, 140, and the difference to be adjusted to current accounts. That's it. This is revaluation account and partners capital account from admission. I hope it is very, very clear. I've done all the workings on the screen so that it becomes very easy. Thank you.